Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is not Hump Day, but Fed Day. Today's the big day we've been waiting for this week, which is the big news. As we mentioned yesterday, the FOMC began its two-day meeting, and today they give their announcement. We do got a lot to go over, as you can see right here. The very bottom there is the FOMC announcement. That will be about 11:15 Pacific Standard Time, and then about 11:30, Ms. Yellen will give her press conference. And, of course, all eyes and ears will be on that press conference and trying to review the announcement. We'll start off today with the Consumer Price Index, also known as the CPI. This is a inflationary gauge on the consumer level, which is important data. So the main line says 0% back in January. We had a pullback of 0.2% in February, which came in forecast. But when you strip out the food and energy, this is what the Fed really looks at because of the volatility of food and energy. We get what they call the core CPI. In January, we had a 0.3% increase. So February was supposed to have a slight increase of 0.2, but it jumped up, exceeded that 0.3. So now the year-over-year results for the CPI comes in at 2.3, just over the 2% where the Fed likes it. Remember, the PCE came in at 1.7. The Fed's gauge wants, the Fed would like it to keep at 2%. So this is going to be important because if inflation is taking off and going up a bit, regardless where the economy is moving, most likely the Fed will raise rates. So this is kind of a key gauge or index to be watching here, our inflationary numbers, especially when we see the PCE, see where that comes in at. We also got housing starts today. As we can see, it exceeded expectations. So in January, we had 1.12 million. Forecast supposed to go up to 1.15 or 153 million, and it jumped up to 1.167 million. So good overall number on housing starts there. So housing still looking pretty strong here. However, on the building permits, it dipped a little bit. We had 1.204 million in January, and we're supposed to go up to 1.21, and it actually pulled back a little bit, 1.167. Now remember, if you looked at the gauge that we saw even like yesterday with the home builders, it basically remained the same. So there was no improvement on the confidence level. So we'll have to kind of watch to see. They're probably getting a little nervous with the possible rate hikes as well as the presidential debates. So a lot of a lot of home builders are probably getting a little nervous about those. So trying to gauge as to where the economy is going to be before they decide if they're going to build more homes or not. But we'll want to keep an eye on that. We also got industrial production. We had 0.8% back in January. February pulled back, as you can see. Industrial pulled back at 0.6%. We're forecasting actually was slightly better at 0.5%. As we saw in New York region yesterday, it improved a bit, so that's good news. Capacity utilization basically came in at forecast. We had 77.1. It dipped down to 76.7 at forecast. Right now, the stock market is currently up. Of course, it also fluctuates with the oil prices. So oil went up a little bit. It's up about a little over $1 right now. So we're up to about 37 bucks. About 37 bucks. Where yesterday we were down about 76. I'm sorry, not 76. About 36. Excuse me. So we're about 37 now, and yesterday was about $36 and change there. Again, a bond market, we're touching on the resistance level here. We have support here at the 100-day moving average. We're just hovering down there right now. We're down about 9 basis points from where we left off yesterday. So we need to be very cautious here and see if the 100-day moving average can keep us above there. As we saw last Friday, we did touch up and bounced up. So we need to keep above this. The next floor support will be the 200-day moving average, which is about 20 basis points lower. So we need to see if hopefully the 100-day moving average can keep us afloat and stay above this range here before we drop further down. All right, folks, so rates are right now about the same where we left off, because usually we like to be about 12 basis points or more before they do a price change. But again, after the Fed's announcement, a lot of things could change quickly. The stock market could go the opposite direction. The bond market, in turn, the bond market go opposite direction, or it could go favor the stock market. So be cautious today, as basically there's no expectations of the Fed raising rates today. But with the inflation earnings coming out, it could be sooner than later. Maybe even next meeting or June meeting when they have their meetings. So it'll be interesting to see when they do it. We'll be waiting for the dot plot coming out later today when they announce it as to how many rate hikes and approximately when they think the rate hikes might happen as well. All right, folks, you guys have a great day. Again, I'm sorry for the long one. We just had a lot to cover today, and today being an important day with being the Fed, just want to cover those bases. You guys have a great day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.